That's going. Perfect. Good afternoon, everybody. Welcome to the TraderMerlin Show. It is a Wednesday, hump day afternoon edition. Sorry for the late delay. We have a little bit of an audio issue, which hopefully we got resolved. Maybe not, but hopefully we did get that one resolved. Looking forward to this session today because I've had a lot of questions regarding, futures topics. You guys have been asking me about natural gas, have been asking me about crude oil, what's backwardation and contango. So let's dive into those topics today and much, much more, whatever you guys decide to go into. We're looking at, as the graphic says here, futures trading, contango, backwardation. Our guest today joining me via phone, via Skype, via Zoom. We're not quite sure how he's connecting today. Mr. John Rowland is joining us. John, how are you doing, my friend?
I'm good. Can you see me?
We see you, and I think we can hear you loud and clear.
Okay, good.
Oh, yeah, sorry for the technical difficulties. We'll make sure to connect like 20 minutes before the show next time just so we don't have any problems.
Yeah, I apologize. I don't know what's going on.
It's the damn internet, man. It just every now and again something happens out there.
It's the ghost in the machine, right?
They're there. Thank you for the police for singing that one. I'm going to start right off with just a quick and easy question. I know this is probably a boring one for you because you've dealt with it a million times, and we've talked about it on the show before, but let's ask this question, and I'll come up to the exact question right here, which is, what exactly is contango and backwardation? What markets do they affect, and how are they relevant? So obviously there's a bunch of loaded questions in there, but let's start off with, what is backwardation and contango?
Okay, so when we think about commodity markets in general, if I'm a producer of a commodity and I've decided that my commodity is worth more in the future than it is today, then what I might do is I might hold on to that commodity and sell it at a later date. Now, I just can't do that and expect that I'm going to get a higher price. There's going to be a cost, right? For storage, insurance, having somebody stand and guard, the cost of money, the cost of a lost opportunity. So what we normally here would understand would be something called the cost to carry, right? In other words, to store it. So in most markets, commodity markets, we are in what is called a contango market, and that is where the front month or the nearby contracts normally are cheaper than the contracts that are in the future. Let's say, for instance, we're in the month of September and then the December contract. So what I wanted to do was show you on bar chart, but in metals markets, you can really see it. So I don't know if you have an opportunity to pull up a couple of commodity months. But in gold, silver, and copper, it's very, very common to see that the front month will be the cheapest of the contract months, and that all the preceding months will have a greater value. So that's called contango. Now, what can happen is, and this is the relevance for what was the fellow's name? I'm sorry.
That was for Les.
For Les, is if we go into a market that was well supplied. In other words, there's a lot of the commodity around. What happens is the contango can become deeper. I mean, the spread between the front months and the back months will become wider.
Mm-hmm.
Now, if we think about this in terms of supply and demand, now I'm talking about real supply and demand. I'm not talking about little boxes on a chart. But the rules are still the same. If you have a market that has too much supply and not enough demand, then what does price have to do?
It's going to go down.
It's going to go down, right?
Yep.
So deepening contango markets usually happen in downtrend markets. So when you watch contango, if it starts to widen, in other words, the front month gets cheaper to the back months, it's really an indication that your market is in a downtrend, or at least the physical market is in a downtrend. Now, on the other side of the coin, we have something that's called backwardation, and that one is where you will see the market is the front month is the more expensive, and all the months behind it are cheaper. And that's because there's a greater demand for the commodity right now than there is in the future. Everybody needs it now. And so again, if we think about supply and demand, if we have too many buyers and not enough supply, price has to go what?
All right, it's going to be going up.
It's going up. So a widening backwardation will give you a confirmation of an uptrend. So what I wanted to kind of show for you folks, but let me see if...
Let me just ask for clarity on that one real quick. Yeah, I don't think
Okay.
I think it's still down. But in that example, just so I'm clear and we got everybody else clear as well, in your backwardation example, it's saying like, okay, right now I'm looking at, let's just say the September contract for silver, you know, the SIU 22. And in a contango market, generally that December contract is going to be should be a slightly higher price.
Yes.
And that would indicate demand, which in my opinion would equals an uptrend, meaning the prices are going up.
No, we got it backwards. Yeah, that's a contango market. So the front month is cheaper, the September will be cheaper, and the December will be higher. Now in metals, that is the normal situation, right?
Okay.
A contango market. And I think if you look at the September silver contract versus the December contract, you will see that the December contract has a greater value than the September contract, correct?
Yeah, I'll pull it up right now since I don't have a really good platform for this, but I should be using bar chart, but so right now your silver right now for the September contract is 18,985, and I'll go in here and go SIU. We'll pull up that silver, go to December.
Z for December.
Yeah, SIZ. I know I didn't. Yes, I know. That I know. And it's, yeah, hold on, it pulled up. SIZ2022. It's pulling up the ruble contract. We're not trading the ruble, folks. There, SIZ. Huh, that is so bizarre. Okay, there we go. That's trading at $19.05. So it's just slightly higher than the December contract by about 7 cents.
Right.
And that's the way it should be.
Normally it should.
Correct.
Yes, exactly. So in metals markets, if you see a backwardated market, then that is actually a sign that there's a huge demand, and that is a very bullish sign in terms of trend analysis. Now, for gold and silver, that rarely happens. It occasionally happens, but it rarely happens. But for copper, it definitely happens. And copper definitely goes from contango to backwardation, especially in economic boom cycles. And so right now, I think it's about parity, but it has turned in recent weeks. And in past months, when copper and inflation was much stronger 6 months ago, we were carrying a backwardation in copper. And that was part of that greater uptrend that we probably see until the market topped out. What was that, back in March or so?
Yeah, it was early March. Yep.
Yeah, so that backwardation started to shrink, and that was kind of a sign that your uptrend is failing, and that we could be beginning the start of a downtrend until it finally got back to a normal contango situation.
So let me ask you real quick. So a couple things. Number one, if you want, you can go to your bar chart and share. If you have a resource for that, so you can show us, because bar chart's up right now. It might be nice to see kind of where you can look at bar chart to find this stuff, because for me it's kind of clunky to go through some of my platforms to find it, but I know you've got tools and resources to give you great examples of it. So,
all right. So let me see if I can
hit that share screen.
Yeah.
Make sure it's the right screen. We want that fans only website popping up there.
Oh, stop it, Merlin. All right, I'm trying to share it.
I see your screen, but you got to move your Skype window out of the way.
Okay, great.
There you go. Perfect.
There we go. All right, so let me re-log in on my account, and please, folks, there we go. All right. So let's go right to the futures market, and I want to kind of really reinforce this for us. So again, here's
it's so much easier.
Gold. I know, it's so much. right, 1752 versus like the February 1774, right?
Mm-hmm.
Silver, there's your 1890 versus, the March silver 1940. So this is a contango market. Now, you can see here for copper, though, we're kind of flat, right?
Mm-hmm.
We're very flat on this one. So what we can do is, which is cool about bar chart, is I can go into the individual contract months and go to the future spread page, and I'm going to go down and let's look at.
And can you configure whichever spreads you would like to look at in here?
Yes,
Custom.
you can customize it, but they do have them ranked here. So for here we have the September. Let's go just look at the September-December futures spread, and we're going to look at a chart.
While you do that, Mark asked a good question. He says, is the higher futures price partly due to unknown conditions in the future in contango? Yeah, Mark, it is, but it's also that with these metals and just commodities in general, there's going to be storage costs and other fees associated with the transportation and things like that, so that's going to factor into it as well.
Yeah, exactly. So here we can see that, back about November of 21, we were in a backward-dated market because the September contract, this is the September contract or the December contract, was worth more than the December contract. Here's our zero value, which where they would equal parity. Mm-hmm. And then price fell, right? Price fell, and we were back into what would be more of a normal kind of contango market, which is what metals do. Now, what I can do here, which is kind of cool, is I'm going to come back in here and I'm just going to put in. Hang on a second.
Yep. It's tough to do with one hand, I know.
I know.
Sorry, man.
So here what I've now done in the blue line represents the price of copper, okay? And you can see that there is a good correlation between the price of copper in terms of an uptrend and a backwardation and a falling copper price and contango. Mm-hmm. Okay. Now, what we've seen in the very short period of time is that, the price of copper has bounced, and what has our spread done? Now it's gotten back to parity, right? It's kind of just a little bit above the zero line. So this could be an indication that we are starting a new uptrend. So let's go back to futures. And the one market, and this is for less, the one market which is really relevant is definitely the energy markets. And so, for instance, here we can see the October contract is trading $94.89, and the December contract is trading $93.65. So this contract month is worth more than the December, and so that means we're in backwardation. And again, if I go to the charts, spreads, and I want to look at the October, December, there it is. And pull up the chart. Again, what we can see here is that price has really gotten, the contango had gotten, the backwardation got very strong. The October price to the December contract, remember, these are only 3 months apart, got as high as $5 over, and now it's back to about $1 over, okay? Now, again, if I just put the value of crude oil, and for my bar chart users, a little trick is if you do the root symbols *0, hang on, root symbol *0, you get a nearby contract, so it kind of just keeps rolling it over. Yeah, and there you can see that correlation, right? Now, for crude oil, for Les, this is for you, Les. Nobody else, everybody else, don't listen for a second here. One of the contract months that you can really, really see contango play out, and which is important for crude oil, is the December versus the December contract. June versus June, a little bit more or less, but really, when you want to start looking at these kind of these contangos is, or backwardations, is watch the year to year, the December to
Right. So you'd say December 2022 to December 2023.
Right, exactly. Yeah. So let me do that. And where is it? Here we go.
All right.
All right. And again, I'm going to put in, again, this one I'm just going to put in the December contract. It doesn't really matter. I can use the nearby. It's going to give me this show that's basically the same result. But look at that coordination, right? I mean, correlation, right? Really very, very strong correlation. So when we look at a trend, an upstanding trend, and here you say, oh, maybe is this trend over? You don't know, but then you see that the backwardation, now again, look at this from year to year, the backwardation got to almost $17, $18. That's, for crude oil, that's huge. That is definitely huge. But what has happened is the downtrend, that backwardation started to loosen up, but now what we're seeing, right? It's riding back up again. And what is that telling us? Well, that's telling us that there's a lot more demand for the current contracts, in other words, December 22 versus next year. And this could be an indication that maybe the energy play, or at least the inflationary energy play, is not done yet, for at least for the crude oil market.
Right. And with that, like, I think part of the discussion, at least in understanding the little details there, and I'm sure Les and others are going to go, well, fine, I get backwardation in Contango, but how is it useful for me? And I think you just answered it right there. And looking at that crude chart is saying, when I see the sharp spike up here, kind of in the last few weeks or months that we've had for crude oil, actually days, since you are this is a 6-month time frame.
Yeah, it's 6-month daily.
Okay. We've seen the last 5 days, 6 days have been really aggressively strong to the upside. Now you're just like, okay, because you're seeing that surge, that could be an indication that everyone's jumping on the current contract, which could push crude oil even higher. And I think that's the anticipatory effect of using Contango or backwardation in planning out your trades.
Right, exactly. And because we're still in a backwardation, that, again, in terms of now supply and demand, as your viewers are watching, especially in a trending, in this case, I would not even look for supply zones. I would only look for demand zones, because of this idea that there is a greater demand for the current contracts than the futures contracts. Does that make sense?
Yeah. But I mean, theoretically, you could make the assumption or the statement that, look, if everyone's really gobbling up crude oil today and you're seeing that big surge, then the odds are likely that December contract, well, this is the December contract. So let's say, the next March contract, we should start to see that price start to accelerate up as well if the demand is so high right now that should carry forward.
If we continue into the next year. Now,
right.
There's seasonalities you have to take into consideration. And, every month is different too, right? So, that's a great point. Let me go back to the futures market. And, grains are, for instance, let's look at soybeans here. Right now, the September contract is in backwardated to the November and the January contract. That's not normal, right? But you can see that the November contract is in contango to the January contract. Now, September represents new crop, right? That the soybean crop is going to come in.
Mm-hmm.
But what the market is telling us is that there's a need for soybeans, and there's not enough soybeans around, and that's why we're seeing this surge in this backwardation in the soy grain market. And we can see it in some of the other grains as well, corn and soybean meal. But what we can see is that going into next year, or at the end of this year, that maybe that might resolve itself, and that the grain that it needs to be stored until next year is going to have a greater value. And that is kind of a seasonal play. So again, if I'm a soybean or grain trader, this is really kind of giving both or enhancing the idea that, hey, maybe what we're seeing is that we're in the beginning of a very strong fundamental demand cycle, and that demand cycle will create an uptrend.
Mm-hmm.
Right?
Yeah, interesting. And it was funny because on that last one you had there, you had what was corn, I think, was in backwardation. You had soybeans, and then you looked at wheat, and wheat was not. Wheat was in the normal contango environment.
Exactly.
Yeah.
Exactly. Especially this time of year, because we're coming in what is called, that new crop is going to come in. But look at, here's September soybeans. That is a super strong trend. And again, if we go into look at that spread, let's use, here's a September, November.
I got a question. Do you trade options on commodities?
I don't as much as I used to.
Yeah,
but
we all started to slow down a little bit.
yeah. I just the problem with a lot of commodity options. So now, let's, for instance, like active markets like crude oil and natural gas, is there's plenty of liquidity, but some of the lesser commodities, there's not a lot of liquidity. So a lot of times you can be right, and you just can't get anybody to take you out of your position. So it depends on the market, right? So crude oil options, yeah, for sure. Natural gas options, maybe corn. Corn's definitely a very active market. So again, there's that soybeans spread, and you can see that we've gone from way down here 8 cents to was it over was that 10 cents?
Yeah.
Yeah. So, and again, if I put
Gallo, while he gets us ready, he said, "Oh, this means higher inflation." Well, it does for some things. And that last chart, which I think was really not chart, but the table, which was really cool, you could see that corn definitely had declining price estimates for the future, which is obviously good for declining inflation. You had soybeans, which showed a decline. So right now you're paying a higher price for the December contract for soybeans than you would pay if you bought, let's say, the March or June or July. That's showing a decline in the price of that commodity. However, wheat was showing higher prices, which of course would be inflationary. So some of them are showing inflationary pressure, Gallo, and others are not.
Right. And also, as we come, as one contract month rolls off, does that inflationary pressure roll into the next month? And then what you could watch for is the next month that comes up on the rotation of contract months, watch its backward or contango situation versus, the next forward months. And if you see it starting to move towards backwardation, that is just going to reinforce that your uptrend is going to stay intact. So it could go from contango to backwardation if we don't resolve, for instance, grains, we don't have a bumper crop, or that demand doesn't subside.
Yep. I'll have one more question, and then I want to get into promoting some of the things that you're doing because you got some good stuff going on. You, in the past, were on this program talking about natural gas. And of course, we looked at natural gas charts a lot, and it was just, for a lot of people, just dumbfounded, including myself, at how much this thing was accelerating. And that, when we broke those highs back around 625, 650, it was like, man, where are we going? And you were over here going, we're going to 8. There should be no problem getting to 8. We went to 8, and you guys can see it literally wicked 8 and then crashed back down all the way back to 630, then all the way up to 950 and change, all the way back down to 550. And now we kissed 10 the last couple of days. What the hell is going on with natural gas, my friend? You're the man. You know this stuff.
It's the fundamentals haven't changed, and what the drop off that came was the fact that was it Freeport LNG manufacturer went down.
Oh, yeah, caught fire.
Yeah, so that released a lot of that excess supply that had been getting used up to make LNG, and that kind of put pressure on the natural gas market. But in recent weeks, we've seen, a spike in weather demand. In other words, for cooling, electricity demand. Plus, also what's going over in Europe. Again, this lack of supply going into the winter months. So, the European nations have been gobbling up as much LNG as they possibly can get in order to fill up their storage. Now, what has happened is that excess production that's here in the U.S. is being eaten up and going to places like Europe, and now Asia is starting to run into kind of these same supply issues, and that there's a lot of LNG going to Asia. If you're showing charts here, pull up a chart of LNG, which is Cheniere.
Yep, got it. Here's LNG to the moon. I mean, this is a monthly chart, so it's a longer term, but I'm going back to the lows here of March of 2020 to where we are right now, and this is like a Bitcoin type of gain, guys. It's 536% gain for LNG in the last 29 months. Now, I'll go back to the daily here. The picture somewhat remains the same. I mean, it's just been absolutely ballistic over the past month and a half, just like natural gas. I mean, natural gas is up 88% in like 30 trading sessions. I mean, that's insane. Do we peak out at 10 here, or are we looking at significantly higher because of what's going on with Russia?
Great question. So I think in terms of seasonality, the next 6 weeks or so is usually where the weather demand here in the U.S. starts to abate a bit, and temperatures get a little bit cooler. So I think, $10 is kind of the ceiling for right now, but there will be a time as we get, let's say, into the month of October to about November, then there is a seasonality if we are short on storage, and right now we're about 10 to 12% behind year to date and 5-year, that we will see another uptrend, that seasonal uptrend that usually, and then around Thanksgiving, depending on where we are in storage, and at that point, the spot market or the next day gas market kind of drives the futures market, and then that really depends on winter weather. Now, there are some folks that are predicting that we're going to have a colder than normal weather, and it only would take maybe, let's say, a 10 or 2 week sub-normal weather environment for, I think, natural gas then to spike to maybe like $12. But in the short run, do I think that maybe we are topped out here? Yeah, I do. But I still think that the fundamentals have not changed, and that, moving forward, even into next year, I still think that it's a very, very bullish market. I just think the fundamentals change until, the situation in Europe is resolved.
Yeah. And Noam asked this one, and since he's here today, I'll just ask because I know you do a lot with futures, and this is something I don't look at personally. He says maybe you can do a show. We probably won't do a show on it, but you follow the put-call ratio on specific securities to figure out the direction of that stock. And he mentioned that you had a great video on this one. Real quickly, how significant is that to you in understanding the put-call ratio and helping you decide direction?
Yeah, that's a great question. I definitely look at the put-call ratio. Matter of fact, I did a session today on our weekly webinars on our unusual stock options volume page, but also you can find the information in our unusual options activity. So I really use this for 2 ways. First is to identify when we see those extreme outliers in terms of put to call volume, and in this, for instance, this case on this particular stock, 14,000 put volume versus 48 call volume. So there's something going on there. Now you have to go inside the numbers and look at the different expiration dates. Where was that volume? It looks like it was in this one. It was in the January contract. So I might have to look at some more strikes here. So, this looks like somebody is rolling or liquidating a position because we already had previous open interest. And so it looks like they're kind of closing this position out. But if I saw this huge amount of volume and there was no previous open interest, then that would be a very significant story to me.
Yeah.
The other aspect of the put-call ratio for me is when I look at, let's say, are more active options, right? Those that are traded every day, right? Our Apples, our Teslas. What I will kind of do is, to kind of get a pulse of what the market is doing, is this breadth. In other words, for Apple here today, the put call ratio was still in what I would consider a put a tense environment. In other words, a bearish sentiment. So that institutional traders are probably buying more puts. Well, they are buying more puts than calls.
Well, I'm glad I closed out my calls on Tesla today then.
So that, again, I will look at this in terms of market sentiment. And if I see a lot more put volume than I do call volume, then that kind of gives me that bearish sentiment. Now, when we look at equities, that put-call ratio, normally in a normal market or in a bullish market, we usually see more calls traded than puts, and that ratio is usually about 3 to 2. So in other words, 0.67, 0.7 is kind of normal. So when I get to 1, that's telling me I'm a lot more puts. But then again, like down here, we see 32 or 0.32. That could also be an indication that maybe this stock, has been oversold and now people are buying calls or protective calls, or are speculating that this stock is going to go back up again.
Nice. There you go, Noam. Bar chart's got a lot of great resources for you where it kind of aggregates all this data, as you can see, puts it all in one spot, which I think makes it very, very simple, and you can find out more information by going to barchart.com. Speaking of which, let's, since you're there, we don't get to see your pretty face, I understand, but you usually do a Wednesday webinar for Bar Chart, and you guys can find out. I'll share my screen so you guys can see that. You just go up to Learn, and you can see when you click on Learn, it says Upcoming Webinars, and you'll see, of course, it says Upcoming Webinars. However, I want to deviate from that and tell me a little bit about your new show. I know now you're going to be direct competition, so I have to, kind of kick your butt a little bit because you're now competing with me. But John, what's the show, and when am I going to be on?
Yeah, Merlin is a total ripoff of your show. No.
Perfect.
No, it's a kind of a unique show. What we're going to do, or what we're doing, is for the last 30 minutes of the trading week, we're going to kind of look at the news stories that have been driving the market for the last week. Then look at the trends of the week and see how those news stories kind of relate to that, and then also help us to maybe look for opportunities for setups for next week. Along the way, we're going to do a lot of different segments, maybe a chart of the week, maybe, a trade of the week. So I'll share a lot of my personal trades, and maybe even some special guests every once in a while. Now, which is our viewers need to be aware here, is this is going to be for premier members only, but for this week only, we are opening to the general public. So those of you who want to know what our chart is about, or you want to see what some of the great services we have, here's a great opportunity to come in and watch this. And so what I ask you is, the price of a yearly membership breaks down to about, $4 a week. And you tell me in that 45 minutes if you don't get $4 worth of information. And that is only one very small part of all the tools and that features that Bar Chart has.
Yeah, I'm bummed. I meant to join you on Friday. Unfortunately, I got too tied up in things. But as you guys can see there, so Thomasina already is one. Well, Thomasina, let me know. You can pilfer his ideas so that I can now put those on my show. No, I'm. But that's going to be Friday. This one's August 26th. So you can see there 2:30 p.m. Central Time. So that's going to be at 12:30 California. Is that That's
yeah. So the
it's right
market
before
closes at 4:00 Eastern time,
which is
it's 3:30 Eastern time. So yeah, 3:00 Central time.
Okay.
So it's the half an hour before the close, and then after the close, we take about 15 minutes to take questions. We answer, as try as many questions we can in 15 minutes. Right.
Awesome. Sounds good, man. I wish you luck on that one. Let me know if you need any pointers. Although you've been
listen, I do get a lot of pointers from you because you are kind of my mentor in these live shows. So I do appreciate all that you've done for me in the past.
Well, don't let me mentor you in how to set up your microphone and get your speakers working because clearly,
I don't know what happened today.
Because clearly we failed on that one today. But it sounded good. I mean, it's surprising how good it sounds. So. All right, John.
It's only my head that's echoing, and that's a scary thought.
Yeah. Oh, yeah. You're going to have a headache after this one. Well, I appreciate it. Thank you for coming on. Let's get you on and try to do it a little more frequently, but love getting your thoughts on backwardation, Contango, and what's going on with natural gas and some of these other commodities. So thank you so much, my friend. I appreciate it, and I wish you all the luck on your new show.
Thanks, Merlin. I appreciate it very much. You too.
All right, take care. Guys, that was John Rowland. You can find a lot more information by going to simplebarchart.com. He's got all the information you need there. Just go to barchart.com. Of course, you got the Learn portion of it, so you can click right over here. Click on Learn, and you'll see the upcoming webinars and stuff. And when you do that, you'll be able to see this little banner header right here for the Friday session that he'll be doing, which is at 2:30 p.m. Central Time. And you guys have seen, just being on this show for 30, 40 minutes, a wealth of information. This one might be a little bit more structured and per his talking points and discussion. So it might be something nice of value for there. All right, cool. Well, I apologize for some of the little audio issues we had today. Unfortunately, something was just wonky in the system, so I don't exactly know what was going on there. I have gotten a lot of questions about this one, so I'm just going to kind of get the elephant out of the room. People keep messaging me and saying, what are your thoughts on this whole Biden thing and forgiving of student loan debt? And I almost don't want to, because I'm sure that some of you are going to look at me in a negative light and be like, Merlin, that's a selfish way to think about it, blah, blah, blah. But I look at it this way. I got a college degree whether I knew they had good value or not. I worked my butt off to pay my way all the way through college. I didn't get a penny from my parents. I had no didn't carry any student loans. I worked incredibly hard and forgo a lot of expenses that I was wanting to spend so that I could end college debt-free. I worked my ass off for that, and I'm sure many of you do as well. Now, I feel like it's almost promoting fiscal irresponsibility and financial irresponsibility to just look at someone and say, you know what? You took this, you consumed this service, but we're just going to wipe away $10,000 worth of it. I have a personal problem with that because it's not in my work ethic. If I use something, I'm going to pay for it. If I know the cost up front, I'm going to pay for it. And I believe the number I saw was something like 27 million people have some student loan debt. Well, you talk about inflation going from 8.5%, from 9.2% to 8.5%. Everyone's going, yay, yay, yay. Well, here you are now saying I got 27 million people who got $10,000 worth of forgivable student loans. That's $270 billion of new money that you're essentially putting back in the economy. So, hey, here we go again with some more inflationary pressure. So I'm a little bit perturbed by that, because I'm sure there's people in this room that you worked your butts off. You forgo a vacation or a new car because I got to pay down this debt and get my debt down to zero. And you did that with all your effort. And now what you're saying is to these people, hey, you know what? You don't need to worry about it. We'll just cover it for you. Well, what about us? What about everybody in the past that's paid for their college? Should we get a check now just to make it a little bit easier on ourselves because I went through some struggles to pay for that? So I'm not really that happy about it. I don't think that going into it should have been. I don't think that if you consume those classes knowing you had to pay, that you should be washed away and let it all go for free. That kind of bothers me. Bottom line is, it's more money coming to the economy. And if anybody out there is telling you that's not going to be an inflationary pressure, they're crazy. That's going to be an inflationary pressure. So not a big fan of it. There you go. I answered that one because I know too many people have been asking me. We need money printing to keep the system going. Well, yeah, I guess that's one way, because in theory, what should that do, right? In theory, that should weaken the U.S. dollar. Now, surprisingly, we did not really get a follow-through for any of this stuff. Notice here's the daily of the dollar index. I was expecting there to be a bigger follow-through. Love it if we got back to 105. I don't think we will. Maybe we'll get down to 106.50. But I think it's going to... I thought it would have a bigger pullback today. It actually started to rally up, and you can see it has this long topping tail on today's candle, which is telling us that there definitely is some selling pressure up against that 109 level for the Dixie, which pushed things down. Now, overall index-wise, let's check out the index. I know, I'm sorry, I'm going to get hate mail from you guys right now. It is what it is. I'll toughen up my skin. Here's that Dow, fell into that demand zone and bounced a little bit today. So I think that is great. Here you have gold. I'm loving the fact that I sold puts on gold and I sold puts on silver at the money, because those should expire Friday, and I most likely will end up in the money and out of the money and collect all my premium. Great, love it. Nasdaq. Now, Nasdaq, even though it was an up day, it's almost an engulfing pattern that we saw form here, right? That candle from today pretty much eats up what happened yesterday. It was up 0.46%. So all in all, not the wildest, most volatile day, but certainly some action. Here's your S&P, still stuck at that demand zone at 2127. You've got Bitcoin, which is just up for 2 days in a row, but really nothing exciting. Russell 2000 up almost 1%, so looking a lot better there. And then crude oil. Rallying back up. And, it's interesting for me because you have this supply zone that goes back to August 11th and 12th, and we broke through that today. So now it looks like the question will be, does oil get its legs underneath it and continue the bigger uptrend versus this intermediate short-term trend that started back in July or in June? You guys see that lower highs, lower lows. Well, if we zoom out even further, it looks like we just came back down to the long-term trend line. Shmev says, do you think it will be a one-time thing? I don't know, man. I don't know. I personally, I hope it would be a one-time thing. Like, I think it'd be different. My opinion would be very different if the government said today, what we're going to do is we will give you a $10,000 credit. Now, if you're in college, that's a totally different deal. But if you go to school and learn a new trade, learn a craft, and educate yourself and get over like a 3.5 GPA, right? Got to make that stipulation, in my opinion. Then, okay, fine. Then give people incentive to go and educate themselves and retrain themselves and learn a new craft, a skill, a trade, or something, and maybe improve their financial position. I think that's great. But it should be, I'm going into the situation knowing up front that I'm getting this $10,000 credit. Not, okay, someone's going to bail me out for me unable to make my financial obligations. And again, I know I sound bitter and cynical, and I am somewhat cynical because there was no lifeline for my parents at any point with regards to, hey, can I borrow $100? I never would do that. I would always work and make sure I could pay my bills. And, I think everybody should be in that situation and work hard to put themselves in a good financial position. So sorry if I sound like a crotchety old curmudgeon here on that one. I know I'm sure I've got some young people out there that got student loan debt that are going, thank you so much. That really helps. Yes, I'm absolutely certain it really helps. Now, the real key is, what are you going to do going forward? Are you going to, now that you have this little extra $10,000 cushion, are you going to go buy stuff you don't need, or are you going to work even harder to pay down your student loan debt? So hopefully the right thing would be you work harder to get rid of all that student loan debt and then work on all your other debt and get debt-free and then move on to do things you want to do. Let's see. Universities have nearly $1 trillion in endowments and have them pay off the useless degrees. I agree. I had a friend in high school and college. He got an art history degree, and then he got a master's degree in art history. And I was like, what are you going to do with that? He's like, oh, I don't know. I just really love art. It's like, great, but there's not a lot of high-paying jobs in those fields. I mean, you could be a curator of a museum or something like that, but those are such rare. Or be a professor of art. Yeah, it's definitely tough. 3.5 in a lot of degrees is like a 1.7 in an engineering degree. Well, all I'm saying there, Tom, is I think that if you went to college and you worked hard and you put that money to good use, okay, fine. But if you went there and you just partied like a rock star and you barely squeaked by, you've almost failed every class, you shouldn't be rewarded for that. Absolutely not. Reward the people who work hard. All right, anyway, it barely helps. Most of those debts are huge. That's true, especially for people who went on to be like doctors and nurses. You have incredible debt there. All right, I think that's gonna. Man, I'm already running out of time here today. Let me real quickly get to you the economic calendar stuff for tomorrow. And Big Eb wants to know, was that Big Eb? How about the popcorn trade? Okay, let's look at the little bit of popcorn here today. I did not go through and show you this stuff, but here is the popcorn trade of the day. NVIDIA is the top of that list. Now, these numbers are old. At least the hard right edge is old. NVIDIA, they missed earnings and had a 5% drop, and then it shot up 5%, and then it fell, and it's continuing to fall right now in after hours. Autodesk beat earnings, and they were awarded up 7% today. You had Salesforce. They beat earnings and are down 5%. So you just really never know with regards to earnings. But let's check out NVDA. All right, and I'll put this on a 5-minute time frame just so we can see the craziness that's been going on. This is a 5-minute, but this is why I call it the popcorn trade of the day. Look what happened here, right? This is NVIDIA as the market closed. And I'll just go from this peak right before it fell. It fell in 60 seconds, 5.11%. And then in the next minute, it shot from that level all the way up. So you fell 5% in 60 seconds and another 5.33% up in the next 60 seconds. And then right now, as we're drifting down lower and lower, I'm about to zoom out a little bit here. It is down right now, the tune of, just get my numbers straight for you, another 4.99%. So it is all over the place, just ping pong balling. However, not a good sign. NVIDIA, clearly they missed, but it wasn't by much. And I haven't had a chance to listen to what the talk track is with regards to what do their fundamentals look like? What are they citing as being the issues here for the decline? But you notice I drew out this dotted yellow line. That's the low that we achieved in after hours so far, which just barely passes this little area of demand that we saw on July 26th. So I won't be touching this one tomorrow. A little too volatile for me and uncertain. That said, now Tesla, a little disappointed that I sold out today, but I wanted to make sure I got out. Sold out when it was $8.95, so I did okay with regards to price today, but I left a lot of meat on that bone. It was all the way up to like $9.40, so I could have made a lot more, but it ended up being like a 25% rate of return in a little under 2 weeks. So we're very happy with the Tesla one. Again, they split 3-to-1 tomorrow. And yeah, you should see the price of Tesla be just under $300 per share tomorrow. Let's see. Economic announcements. Oh, there was some really good stuff. Boy, this was really interesting now, the picture it's painting for our economy. So we talked, at least I've been addressing my concerns and issues with housing. You guys can see here pending home sales came down at a negative 1%. So that trend is still continuing. It's definitely getting better, but I'm seeing negative numbers. The expectation was negative 2.6, came out at negative 1. So a slide in pending home sales. You're hearing record number of homes are now dropping their prices. Durable goods orders came out flat, meaning no one's buying TVs and refrigerators. So, these are factors that will start to play into the economic data. Not looking very good with regards to those announcements there today. Now, tomorrow we do have quite a few announcements. No popcorn trades of the day, unfortunately, but I'll start things off with your economic calendar. So let me go into that one. Here you can see for the U.S., we have preliminary GDP, which the expectation is it's going to continue to get better. It was negative 0.9 according to the advanced GDP we got last month. It's been a month since we received that number. Now they're expecting it to be 0.7%, meaning it's getting a little bit better, and a lot of that has to do with the declining commodity prices for sure. Unemployment claims come out tomorrow for the U.S., and that's pretty much it for, natural gas storage. That will obviously create a little bit of a wild ride. But for the rest of the world, you don't see anything there that's too significant other than the beginning of the Jackson Hole Symposium. That'll be all day. It's one of those things that during the symposium, guys and gals, be very careful, because what you might get is something real quick. You could very quickly see some significant spikes in the market, and you're going, what is happening here? And it could simply be an announcement that was made or something that was said at that Jackson Hole Symposium. So keep your eye on that. And also earnings tomorrow. Remember last week, we had really bad retail sales numbers, which was, it kind of felt like it was foreshadowing some of these ones. Well, a lot of them have lowered their expectations, but tomorrow you got Abercrombie & Fitch. I'm going to read the retailers first. Abercrombie & Fitch, Ulta Beauty, Dollar General, Dollar Tree, Shoe Carnival, Burlington, and then Dell Computers in that retail space. You also have Workday and Marvell Technologies will be reporting earnings tomorrow. Negative 0.07 is getting better, aka, yes, correct. You're 100% right, Tom. It is getting better, but it's still bad, right? That preliminary GDP, negative, we're still showing a decline in GDP. That is the hard fact there, but it's definitely moving back up towards zero, meaning we're not growing or shrinking. At this one, it's saying we're currently shrinking, so not a good scenario to be in. All right, I am late. I got home, so many things to do. AVP, I thought we did that, thoughts on NG. John Rowland did a whole session on natural gas, and it looked like he was rather optimistic for the price of natural gas going forward. Oh, yeah. Oh, you big Ab, you think that these bougie ass central bankers are gonna be sitting there eating McDonald's and Chick-fil-A? It's gonna be bison burgers, straight from the ranch, man. Gonna be good stuff. It should be a pretty good one. I don't know. It's why you don't want to lose on the dry gulch. Well, if you're having a good week, then you go into ultimate defensive mode, right? To me, it's the same. If you're having a great week, Doug, and thanks for the tangent, but it's a good reference point. You guys might remember a Super Bowl a couple years ago between the Atlanta Falcons and the New England Patriots. I had money on the Atlanta Falcons to beat New England outright. It was great odds, right? They were up by 28 points in the fourth quarter. So all Atlanta had to do, all they had to do was play defensive, right? And just don't let the Patriots do what they always seem to do and come out of nowhere and beat you. Instead, they played stupid. They kept doing really aggressive things and throwing the ball deep and all of a sudden throwing interceptions. Run the damn ball, right? I think in your situation, if you're having a great week, start to go a little bit more on the defensive. This is just the way I do it as well, because I know from personal experiences, I'll be having a great week and all of a sudden I start to feel more confident and I'll trade like way bigger than normal and all of a sudden I give it all back. So play that defensive side as much as you can. And Tom and Big Eb, as far as crashing that Jackson Hole party, I'm pretty sure Secret Service and it'd be incredibly tight security there. But I would love the stories of you guys trying to break into that. That would be a great one. All right, that's going to do it for me for today. Tomorrow we're going to have Corey Lane talk about options. So if you guys have options questions, do me a favor, send those on in on the YouTube channel. Just go to this video or any other video and type in your comments and questions down below that YouTube video for Corey Lane for tomorrow. I've already got a couple lined up for that, so I'm excited. It should be a good one. Corey is always an entertainer on this program as well with a lot of great content. So if you have comments, put them down on the YouTube video, or as you can see on the screen, TraderMerlin@gmail.com. That'll be another way for you to send them on in and get your questions answered by me live on air. That's it. Thanks, everybody. Hope you enjoyed the John Rowland Show today. Even though we had a little bit of issues and got started late, you can find out more information at barchart.com. All kinds of great resources there for you. Take care, everybody. I will see you all tomorrow.